Yeah, good morning, students. So, welcome to the first session of Income Tax Amendments class, applicable for November 2020 exams. So, today the schedule is goes like this. By the time we started, it's 9:15 now. So 9:15 to 10:45, we will continue a continuous session of 1.5 hours. Then 10:45 we will take a break. We'll take a break for 45 minutes, right? And then we will start the second session at 11:30. 11:30 to 1 o'clock. Another 1.5 hour session, right? So with this morning session will get completed. Two sessions will be there. 9:15 to 10:45 and 11:30 to 1. In the afternoon, we will start at 3 o'clock. We'll take a break of, okay, 1.5 hours is enough. 2:30 we will start. At 2:30 we will start. So 1 to 2:30 you will be having lunch break. At 2:30 we will start. 2:30 to 4, third session of the day. Third session of the day. And if in case if in 30 minutes that entire amendments and RTP is going to be completed, if that be the situation, we will continue the session till 4:30 and we will continue. We will complete it. In case no, it requires some another 1 hour or 1 hour 15 minutes, then we'll take a break for half an hour, like 4 to 4:30, and we'll continue the next session until the completion of both amendments and RTP. Is that clear, everyone? Is this okay to everyone? 9:15 to 10:45 one session, and then 11:30 to 1 o'clock another session. Then we'll have 1.5 hour lunch break. So 2:30 to 4 o'clock, and depends upon the situation, we will continue or we will take a short break of half an hour. Then we will decide accordingly. Clear, ma? Everyone? Good. And I was for the time being disable your audio option and video option. No need of even enabling your video, sir, at your convenience. At your convenience. And audio option also I was disabled to the students. Sir, if you have any doubts, either you can text me. You have the message option, you already know it. Either you can text me, or uh, I will take last 10 minutes or 5 minutes of every session as doubts session. Like first session will be 9:15 to 10:45. So 9:15 to 10:40 I will continue. 10:40 to 10:45 or 10:40 to 10:50, let us allocate for doubts session of the first class. Okay, now, because in between, if you ask the doubts, what will happen is the other students will get somewhat deviated, or somewhat feel uh, disturbance. So either you can text me, or we will have a doubts session at the end of every session, last 5 to 10 minutes. Clear? Like that all your doubts will get clarified. Don't worry. Don't worry. And as I said, I ask you to prepare that maintain the November 2020 RTP. Hope everyone get ready with that November 2020 RTP, right? And I am going to explain only through that RTP as well, because so it's a material released by the ICI which is most and more relevant to examinations. Clear, ma? I've also prepared the material in a very simplified manner. Yeah, by the end of this session, I will provide you that material, or next day. But don't worry, in the meanwhile, I will explain each and every amendment with the help of example with the running notes. Clear? Everyone must maintain a notebook and pen along with you right now, because I'll take the class with the help of the notes as well. Whenever there is a requirement of a example, I'll take the notebook and pen and everything. I'll explain with the help of example. So everyone must study with RTP November 2020 material, and then a notebook and pen, calculator, everything. Hope everyone ready with the all, and let's start without any delay. Clear, everyone? Right. So So are you able to see my notes as well? You can find a user with the name CA Samba Shiva, a user with the name CA Samba Shiva. There you can find my notes. You just scroll left on your mobile screen, then you will find the list of participants, where in that list of participants you can find CA Samba Shiva. You just double tap on it, my notebook will appear on your screen in a larger screen. Okay, ma'am. Hope everyone get this. So income tax amendments applicable for November 2020 exams. Applicable for November 2020 exams. Right. Especially the subject like taxation, ma, amendments plays a key role, sir. Right? Why? Because the institute expects whether the student is updating himself or not with the latest provisions, especially the subjects like taxation. So that is why at least 10 to 15 marks will be come from amendments every attempt. I'm saying the lowest marks. 10 to 15 marks definitely you will get from amendments. And this attempt is going to be very crucial when it comes to amendments because it includes May 2020 amendments and as well as November 2020 amendments. May 2020 amendments and November 2020 amendments, which includes. So it's not enough to know only November 2020 amendments. You must also have to know May 2020 amendments as well. See, if you have recently taken the coaching for taxation subject, by default, that material contains May 2020 amendments by default. Whatever the material you given to you from the respective coaching institutions, that respective coaching institution would have included already that May 2020 amendments. Now, when it comes to Shrestha, to whom now we are taking the crash batches, the material which I provided to the crash batches, ma'am, I know that some of the students are here from crash batch in that at present, whatever the participants who are there here now. Now, whatever the material given by me to crash batches of Shrestha, that's already amended by the May 2020. Already amended, which includes all the amendments applicable for May 2020 and almost most of the amendments applicable for November 2020 as well. Most of the amendments. Most of the amendments. If you already knows the May 2020 amendments, November 2020 amendments are very less, very less. In May 2020 only we got the very huge number of amendments when it comes to income tax. When it comes to income tax, right? How many of you already knows about May 2020 amendments who are in this class right now? Good. Gopi, very good. Very good. Many of the people using the option of raise the hand, very good, ma. Everyone who knows that the May 2020 amendments, right? Please raise your hand. Thereby I can understand whether, yes, excellent, excellent, ma. Almost all the students. Nice, nice. But don't worry, I'll discuss May 2020 amendments as well. Don't worry. I'll discuss first priority First priority, I'll discuss November 2020 amendments. Then even after that, I will discuss May 2020 amendments as well. Clear now? Don't worry. Next. Sir, November 2020, we are going to write our exams. And I hope exam schedule already released, right? When is our taxation exam? No one knows. Don't say that is the fourth paper in the group one, sir. Whenever there is a group schedule, uh, so the last paper will be the taxation. 8th November, ma. Okay, very nice. Very nice. So 8th November will be our taxation exam. And that means all the amendments made up to November 7th are applicable. Huh? No, no. All the amendments made up to 30th April 2020. All the amendments made up to 30th April 2020 applicable for November 2020 exams. November 2020 exams. This is the first important point one should know. Amendments made up to 30th April 2020, 30th April 2020, applicable for November 2020 exams. There must be a time gap of minimum 6 months between the exam attempt and the amendments. Between the exam attempt and amendments. That is why amendments made up to 30th April 2020 and all the notifications, circulars, provisos issued up to 30th April 2020. Up to 30th April 2020. Applicable for November 2020 exams. Applicable for November 2020 exams. Applicable for November 2020 exams. Right, ma'am? Next. So first of all, what do you mean by an amendment? Okay, we are learning amendments. Very nice. What do you mean by an amendment first? Can anyone? What do you mean by an amendment? Before going to learn for amendments applicable for November 2020 exams, first of all, let us try to understand the meaning of amendment. Oh, good. Updating in the existing provision, very good. A change in the actual provision, good. Loophole in the old provision, change in the provisions, good. Change, additions and deletions, very good. Lakshmi Suachala, you are my student. Change in law or act, good. Any changes like inclusion or omission or updating the current provision, very nice, Rupesh. Any changes appears in the provisions of law, good. Additions or deletions in the law, very good. Right. See, what you all people said is very correct and very good. Right. So amendments contains three parts, ma. Could be anyone. Okay. Addition of a new section to the act. Additions and then new sections. Introduction of new sections like section 194N, 194M, section 80EEA, 80EEB, These are some new sections introduced by the Finance Act 2019. Finance Act 2019. Some new sections introduced, additions. Next, updations or changes. Updations, changes in the existing provisions. Changes in the existing provisions. Right? Next, third one, deletions or omissions. Omitting some existing provisions, deleting some existing provisions. So amendment could be an addition, amendment could be an addition, amendment could be an updation, right? Making changes to some existing provisions, or amendment could be deletion and a complete removal of that particular section impact, complete omission of that particular section's impact. That is what we call amendment. That is what we call amendment. Right. Next. And when it comes to the examinations point of view, the very first question is total income problems. And you will be having this amendments impact in the total income problems. Definitely, at least 3 to 4 provisions having the amendments impact will be asked in the total income problem. You might have seen in November 2019, the total income problem question is given for 14 marks. 14 marks, total income problem. Are you following me? Taxation paper is for 100 marks. Part A consisting of MCQs, 30 marks. Part B consisting of descriptive, 70 marks. Part B, descriptive, 70 marks. Of which income tax, the only one problem, total income problems, November 2019 question paper, if you have already seen it, you can see the very first question is total income problems, and it was for 14 marks question. 14 marks question. And expecting the same kind of pattern prevails even for November 2020. Definitely you will be having the question from total income problems, and that will be for minimum 12 marks and even maximum 14 marks. And that particular question contains definitely 3 to 4 provisions, 4 adjustments relating to amendments. Relating to amendments, expecting section 80EA, 80EEB. Clear now? Right? So you must be very thorough with the amendments. Now let's moving on to the amendments. So this is your November 2020 RTP. November 2020 RTP. Right? And let me share on the screen why unnecessarily this. Yeah, hope everyone can see that RTP on the screen. And don't draw anything on the screen, ma. I'm enabling that annotations, but don't draw. I'm enabling just because I need to write something on the screen. So don't use that opportunity and show your drawing skills on the screen. I know you are very multi-talented people, right? Sumant Reddy, I'm talking already now. You're doing same thing. Whoever draws on the screen, I can see your names, ma. Are you following now? If you misutilize this opportunity, you will be out of the meeting. As simple as it. If you want to listen to the class, listen to me. Clear? Right. So, hope you cooperate. Right. So, income tax law as amended by the Finance Act 2019. Right. And yeah. You can see the important point here. Amendments made up to 30th April 2020 are applicable for November 2020 exams. Right? Next. And that significant notification circulars and legislative amendments made up to 30th April 2020 also relevant for November 2020 examinations. Now let's moving on. So let us see the amendments in chapter 1, basic concepts. Of course, this amendment already known to you, right? In Finance Act 2019, we have seen some enhanced surcharge rates applicable to individuals, HUFs, AOP, BOI, AJP. Individuals, HUF, Association of Persons, Body of Individuals, Artificial Juridical Persons. Enhanced surcharge rates of 25% and 37%. 25% and 37%. 25% and 37%. When your total income is in between 2 crores to 5 crores, it is 25%. Exceeding 5 crores, it is 37%. Right now, we have seen that limits for individuals and HUFs, AOP, BOI, AJP. The surcharge applicable only when that person total income exceeds 50 lakhs. Exceeding 50 lakhs, but not exceeding 1 crore. How much more? 10%. Exceeding 1 crore, but not exceeding 2 crores. 15%. Exceeding 2 crores, but not exceeding 5 crores. It will be 25%. Exceeding 5 crores, 37%. Exceeding 5 crores, 37%. Earlier, we used to have only the first two surcharge rates, 10% and 15%. These two were newly introduced by the Finance Act 2019. These two were newly introduced by the Finance Act 2019. Right, ma'am? Now, what they have said is, this enhanced surcharge rates are not applicable. This enhanced surcharge rates are not applicable with respect to short-term capital gains taxable under section 111A and long-term capital gains taxable under section 112A. Short-term capital gains taxable under section 111A, long-term capital gains taxable under section 112A. Generally, when 111A and when 112A is applicable, whenever there is a transfer of listed company shares or units of equity oriented mutual funds or units of business trust transferred through a recognized stock exchange on which STT has been paid both at the time of acquisition and sale. If the nature of the capital asset is a short-term capital asset, then whatever the gains you are going to get taxable under section 111A. If the nature of the capital asset you have transferred is a long-term capital asset, then whatever the long-term capital gains you are going to taxable at 112A. Yes or no? If 111A attracted, taxable at 15% flat rate. If 112A attracted, taxable at 10% flat rate. Taxable at 10% flat rate. Is that clear to everyone? Now, for these two sections, the enhanced surcharge rates of 25% and 37% not applicable. Not applicable. That enhanced surcharge rates of 25% and 37%, you need to apply only when it comes to other income. Only if other income exceeding that specified limits of 2 crores and 5 crores, then only you can apply this enhanced surcharge rate of 25% and 37% on tax liability of that other income. Clear, right? The maximum surcharge rate you can apply with respect to tax on these two sections is 15%. 15%. You cannot apply 25% and 37% on tax liability arising on 111A and 112A. Clear, everyone? You can see that. We have also given with the examples. You might expect these kind of examples straight away in the main exam in a question form or at least in an MCQ form. at least in an MCQ form. Just hold on a second, ma. Sorry, ma, an important call need to attend. Yeah. Yeah. I've just muted my voice because I'm on a call. Yeah. Fine, let's continue. Let's see that example, ma. Where the total income, including income under section 111A and 112A, greater than 50 lakhs, but less than or equal to 1 crore. Less than or equal to 1 crore. That's it. Our continuation is there. No, that's it. It is situation 1. So rate of surcharge of the income tax 10 percentage. 10 percentage you need to apply as the total income exceeded 50 lakhs but not exceeded 1 crore. The rate of surcharge you need to apply 10 percentage, and you can see the example as well. Components of total income under short-term capital gains under section 1A 30 lakhs and long-term capital gains under section 112A 25 lakhs. Other income given 40 lakhs. Now, the surcharge at the rate of 10% would apply on the total tax liability of 95 lakhs, right? So first you should calculate the tax liability on 95 lakhs. Of course, under section 111A on that 30 lakhs, we are going to apply 15% tax rate. And on this 25 lakhs, we are going to apply 10% tax rate, 10 percentage. And on the other incomes, you need to calculate by using slab rates, by using the slab rates. Okay, now short-term capital gains at the rate of 15%, long-term capital gains at the rate of 10%. For this other income, you need to apply the slab rates. So first find out the income tax. First find out the income tax. Now on that entire income tax, levy the surcharge at the rate of 10%. Levy the surcharge at the rate of 10%. Entire 95 lakhs. Clear? Next. Moving on. Second situation, where the total income including income under section 111A and 112A exceeds 1 crore but not exceeded 2 crores. Now the rate of surcharge applicable 15% because the total income is in between 1 crore to 2 crores. Example Chunma. Short-term capital gain 60 lakhs, long-term capital gain 65 lakhs, other income 50 lakhs. Other income 50 lakhs. Now, as usual, for short-term capital gains, apply the tax rate 15%. Apply the tax rate 15%. For long-term capital gains, 10% for slab rate. Other incomes, slab rate. On that 50 lakhs, find out the tax liability as per the slab rate. On that 50 lakhs, apply the slab rate at the rate of, 5%, 20%, 30%. Clear? Now find out the tax liability first and the entire tax liability. Apply the surcharge at the rate of 15%. On the entire tax liability, apply the surcharge at the rate of 15%. No issues. Next. Notes video not appearing. Notes video actually I'm not. See on screen if you are observing the material, notes will not be there. When there is no material, then only notes will come into picture. Okay now. So when I, share the material, you will see only material, not the notes. And I'm not going to write anything on the notes as well. Don't worry. When I share the notes, I will tell you, Amma. Don't worry. Just look into the notes. I will tell you. Next. Point number 3. Where the total income excluding triple 1A and 112A exceeds 2 crores, but not exceeding 5 crores. Total income excluding triple 1A, 112A, and that other income exceeding 2 crores, but not exceeding 5 crores. Now for other income, apply the rate of surcharge 15%. For this special income, apply the rate of surcharge 15%. Look at this example. Short-term capital gain 54 lakhs, long-term capital gain 55 lakhs, other income 3 crores. Other income 3 crores. Right? Now for the tax liability on these two incomes, on this tax liability, levy the surcharge at the rate of 15%. And the tax liability on this 3 crores, levy the surcharge at the rate of 25%. Levy the surcharge at the rate of 25%. Are you following, ma'am? Or let me do the tax computation calculation as well. For one question, let us do for the better understanding. Now I'm going to write on the notes. Now you will see the notes on the screen, ma'am. Yes, Sharaf, that is what I'm doing. I'm explaining this example with the help of the notes. Yeah. So I'm explaining the third situation in the amendments material, ma. Third situation in the amendments material. So what they were said, short-term capital gains under section 111A, 54 lakhs. Long-term capital gains under section 112A, 55 lakhs. Other income 3 crores. Compute the tax liability. You just do it on your own first. I'll tell you, ma, don't worry. I'll tell you. Just try it. Three cans. Three cans. Three cans. Tasting like this. Three cans creation like this. calculation of tax liability, ma. Calculation of tax liability. First, when it comes to tax on short-term capital gains, $54 lakhs into flat rate of 15%. 54 lakhs into flat rate of 15%, which comes to 8 lakh 10,000. 8 lakh 10,000. Tax on long-term capital gains. Tax on long-term capital gains. 55 lakhs they have given, ma. Sir, should I calculate the tax liability on entire 55 lakhs or should I calculate only on 54 lakhs? Respond everyone. Tax on long-term capital gains. Long-term capital gains given 55 lakhs. Should I calculate on 54 lakhs or should I calculate on 55 lakhs? Okay, good. First answer. Inka, everyone should respond. Very good. Majority of the students are saying 54 lakhs. One student said 55 lakhs. Good. 55 lakhs. Okay, good. 54 lakhs. Good. Under section 112A, we have an exemption benefit of rupees 1 lakh. 112A is actually a replacement section. Earlier, we used to have a section called section 10 clause 38. Section 10 clause 38, where you have the entire amount of long-term capital gains as exemption. Three cats. Right, ma. Under section 10 clause 38, under section 10 clause 38, we used to have the entire amount of the long-term capital gains exempted from tax and right. The long-term capital gains arising on transfer of a long-term capital asset, right, of listed company equity shares, units of equity-oriented mutual funds, and a unit of business trust. Any amount of long-term capital gain you got is fully exempted from tax. Earlier, under section 10 clause 38. Now, in the place of section 10 clause 38, now we are observing the introduction of section 112A. Introduction of 112A, where the exemption is restricted to 1 lakh only. 1 lakh only. The exemption is restricted to 1 lakh only. And in excess of 1 lakh is going to be taxable at a flat rate of 10%. With indexation benefit or without indexation benefit? Without indexation benefit. Without indexation benefit. Are you following now? Just a second. So the correct answer is, as I said, we have an exemption benefit of rupees 1 lakh. We should calculate the tax liability on for 54 lakhs only. In this example, we should calculate on 54 lakhs only. Are you following, ma? I'll read out the bare section, thereby you can understand. The amount of income tax calculated on such long-term capital gains exceeding 1 lakh rupees at the rate of 10 percentage. At the rate of 10 percentage. This is from the bare act, the bare provision of 112A. The amount of income tax calculated on such long-term capital gains exceeding 1 lakh rupees. Right, ma? So it will be 54 lakhs into flat rate of 10 percentage. So it comes to 5 lakh 40,000. 5 lakh 40,000. Right, now total it up, how much you will get? 14 lakh 40,000. Sorry, 13 lakh 50,000. 13 lakhs 50,000. This is what we call income tax. Income tax, for which add surcharge at the rate of, the maximum surcharge we can levy here is 15 percentage. 15 percentage. So 13 lakh 50,000 into 15 percentage. You will get more 2 lakh 2,500. 2 lakh 2,500. So total income tax plus surcharge comes to be 15 lakh 52,500. 15 lakh 52,500. This is with respect to income tax plus surcharge on capital gains. Now when it comes to other income, tax on other income, how much? 5 crore, 3 crores kadama, 3 crores, that is 3 crores. So apply the slab rates, assuming that assessee is an individual assessee and having the age of less than 60 years, having the age of less than 60 years. So then up to rupees 2,50,000 nil, 2.5 lakhs to 5 lakhs at the rate of 5%, 12,500, 5 lakhs to 10 lakhs at the rate of 20%, which comes to 1 lakh, and above 10 lakhs, 10 lakhs to 3 crores at the rate of 30%. 10 lakhs to 3 crores and 2 crores 90 lakhs into 30%. You will get more 87 lakhs. So income tax 88 lakh 12,500. 88 lakh 12,500, on which you need to apply surcharge at the rate of, add surcharge at the rate of 25%. Surcharge at the rate of 25%, which comes to 22 lakhs 3,125. 22 lakh 3,125. So both income tax and surcharge put together 1 crore 10 lakhs 15,625. 1 crore 10 lakh 15,625. 1 crore 10 lakh 15,625. And not yet completed. So the total income tax plus surcharge. On capital gains, how much you get? 15 lakh, 52,500 plus on other income you get 1 crore 10 lakh 15,625. Total it up 1 crore 25 lakh 68,125. Now on which we need to add what? Health and education cess at the rate of 4%. Health and education cess at the rate of 4%. 5 lakh 2,725. So total tax liability 1 crore 30 lakhs 70,850. 1 crore 30 lakhs 70,850. So this is how we need to calculate. First, we should calculate the tax on capital gains and on which we need to apply the surcharge at the rate of 15%. Then tax on other income on which we need to apply the enhanced surcharge rates of 25%. Clear everyone? Right. Note it down now. Bitu darling. Yeah. Just a second, ma. Now let's moving on. Wait, we have it out here. 25%, yes, it is in between 2 crores to 5 crores. It is in between 2 crores to 5 crores, and that is applicable only to normal income, general income. Yes, that's only applicable to general income. And when other income exceeding 5 crores, then 37% is a rate of tax you can apply. 37% is a rate of tax you can, that enhancer surcharge rate you can apply. 37%. And 37% enhanced rate applicable only for the tax liability on general income. 25% is also applicable on tax liability on general income. You should not apply this 25% and 37% on tax liability of these two capital gains. For these two capital gains, the highest surcharge rate applicable only 15%. That is what the amendment actually. Okay, now let's go to the material once again. Yeah. Next, moving on. Now look at the situation number 4, where the total income excluding income under section 111A and 112A exceeds 5 crores, and that general income exceeding 5 crore, on that general income, apply the surcharge at the rate of 37%. And when it comes to capital gains, apply the surcharge of 15% only. The maximum surcharge you can apply is only 15% with respect to short-term capital gains, long-term capital gains. That is what they have said. Okay, now that's the situation 4. Next, where the total income, including income under section 111A and 112A, exceeds 2 crores in case not covered in 3 and 4 above. You can see here, short-term capital gains 60 lakhs, long-term capital gains 55 lakhs, and other income 1.1 crore. Other income 1.1 crore. So put together, you got a total income of 2 crores 25 lakhs, 2.25 crores, 2.25 crores. Now find out the tax liability on this 2.25 crores. On the entire tax liability, you can apply 15%. You can apply 15%. Because here other income not exceeded 2 crores. Other income is in between 1 crore to 2 crores now. So that is why the maximum surcharge rate even applicable on other income 15%. Clear? Next. So profits and gains from business of profession, we have an amendment regarding the increase in the rates of depreciation, right? Motor buses, motor lorries, motor taxis used in a business of running them on hire basis and acquired and put to use in between these dates, in between 23rd August 2019 to 31st March 2020. 31st March 2020. Then the rate of depreciation applicable is 45%. 45%. Earlier, it used to be 30%. Before the amendment, it used to be 30%. Before the amendment, it used to be 30%. Now, after the amendment, it is increased to 45%. It is increased to 45%. Are you following me? But the condition to be satisfied is it must be used in the business of running them on hire basis, and it must be acquired and put to use between 23rd August 2019 to 31st March 2020. Then the rate of depreciation is 45%. Right? Next. Look at here. In case if you buy that motor cars other than used in running them on hire basis, other than used in a business of running them on hire basis, then the rate of depreciation increases to 30%, as earlier it is 15%. Earlier it is 15%. Now it is increased to 30%. Now it is increased to 30%. Okay, so this enhanced this depreciation rates you need to remember. And you might get an MCQ here. You might get an MCQ here regarding this, and this dates are very important. You will get confused by these dates. They might be asked an MCQ like the motor car purchased and put to use on hire basis, purchased on 1st August 2019 and started put to use from 10th of August 2019 under. మనకేంటి rate of depreciation 45% increase and విషయం గుర్తుంటుంది. But you should also remember these dates as well. You should also remember this date as well. That enhanced rate of depreciation 45% or this 30% applicable only to those motor cars or motor buses purchased and put to use in between 23rd August 2019 to 31st March 2020. You must be very, very careful. Must be very, very careful. Sometimes you will be asked a question like this: purchased on 1st August 2019, started using for the business from 25th August 2019, right? Acquired on 1st August 2019, put to use from 25th of August 2019. Now, which depreciation rate should I apply? Old depreciation rates or new depreciation rates? Yes, absolutely correct, Amma. You should apply the old depreciation rates because in between 23rd August 2019 to 31st March 2020, the assets must be acquired and put to use. Both conditions should be satisfied. Acquired and put to use should be happen between 23rd August 2019 to 31st March 2020. Everyone careful. Right. Now in this example, the correct answer is old depreciation rates are applicable. Old depreciation rates are applicable. And old depreciation rates and 30%, 15%. 30%, 15%. Sir, okay, I'll give you one more example. I'll give you one more example. Sir, I purchased on 20th March 2020 and started using from 20th April 2020. Now, should I apply old depreciation rates or should I apply new depreciation rates? Very good. In this case also, I should apply old depreciation rates. I should apply old depreciation rates. Why? Because acquisition condition satisfied. Acquisition condition satisfied. In between that 23rd August 2019 to 31st March 2020, I have acquired. But I have not put to use in between 31st March 2020. I've started using them from 10th April 2020. Both acquisition condition and put to use condition should be satisfied. Both acquisition condition and put to use condition should be satisfied. Are you following my everyone? Then only that new depreciation rates are applicable. Then only the new depreciation rates are applicable. And from this you have to understand that you need to remember the old depreciation rates and as well as new depreciation rates. Old depreciation rates and as well as new depreciation rates. Everyone must be careful here. That 15%, 30% you should remember. 30%, 45% you should remember. Along with that, these dates should also be remembered. 23rd August 2019 to 31st March 2019. Clear everyone? Any doubts? Next. Moving on. Capital gains. Capital gains, the only amendment is that regarding the cost inflation index. Cost inflation index. You already know the cost inflation index for the financial year 2019-20. How much? How much? Very good. We've already done so many problems in capital gains. We already have habituated to that number. 289. Absolutely correct answer. So the cost inflation index you are going to apply for your examination attempt is 289. Now for November 2020 exams, relevant previous year means previous year 1920, assessment year 2021. Previous year 1920, assessment year 2021. Clear everyone? Right? For November 2020 exams. Now, can anyone tell me, of course, it's not important for your exam point of view. Can anyone tell me the cost inflation index for the financial year 2020-21 and assessment year 21-22? Okay, general knowledge purpose. For the financial year 2020-21, assessment year 21-22. Very good, Masharak. It's 301. It's 301. 301. CBDT already notified, sir. CBDT already notified the cost inflation index for the financial year 2021, right? So 301 is a cost inflation index numbers for the previous year 2021, for the running previous year, 2020-21, 301. Of course, not applicable for your exam. This I have told you only for your general knowledge purpose. Only for your general knowledge purpose. Not important for examination point of view. Clear? Right, ma? Next. Moving on. Yes, you can see here the cost inflation index for the financial year 1920 to 89. For the financial year 1920 to 89. Next, moving on. Income from other sources. Let's go and roaming on unauthorized colonies of Delhi, because this amendment is regarding the unauthorized colonies in Delhi, right? Notification of class of persons, receipt of immovable property from whom would not attract the provisions of section 56 to clause 10. Section 56 subsection 2 clause 10. What generally 56 to clause 10 explains about? It explains about taxability of gifts. Taxability of gifts. Taxability of gifts. Section 56 to clause 10. So whenever you are receiving the gifts in cash or in kind, when it comes to the cash gift, if aggregate amount of the cash gifts received during the previous year exceeds 50,000 rupees, then the entire amount of the cash gift is taxable. Coming to the gifts in kind, movable properties, immovable properties. Movable properties, movable properties, if you received without any consideration, then fair market value exceeding 50,000, the entire fair market value is taxable. In case if you receive for inadequate consideration, then you have to see the difference between the fair market value and consideration paid. If difference exceeds 50,000, if difference exceeds 50,000, the entire difference is taxable. Coming to immovable property, same provisions holds good, but instead of fair market value, we should take stamp duty value. We should take stamp duty value. Right, ma? If you received without any consideration, then look at the stamp duty value. If exceeding 50,000 rupees and also exceeding the 5% of sales consideration, then the entire amount of the stamp duty value is taxable. If received for inadequate consideration, look at the difference. Look at the difference between the consideration paid and stamp duty value. If difference exceeding that 50,000 rupees, then the difference amount will be taxable as gifts. This is general provision under section 56 to clause 10. Under section 56 to clause 10. But of course, we have some exemptions, right? Some situations where the gifts received are not taxable. Right, there is a proviso to section 56 to clause 10. That proviso lists out the circumstances under which any sum of money or the value of property is not chargeable to tax, like gifts received from relative, gifts received on the occasion of marriage, gifts received on the occasion of by way of will or inheritance, gifts received when a person is on deathbed, that is in contemplation of the death donor or the payer. Like this, we have some situations where the gift is not taxable, where the gift is not taxable. Now, in the Finance Act 2019, we have seen a new clause, clause 11. Clause 11. The first paragraph is explains about 56 to clause 10, which we all knows, right? That explains about the main provision of the section only. The amendment comes in second paragraph only. The amendment comes in second paragraph only, and that too from the third sentence. Finance Act 2019 has inserted clause 11 to the proviso to provide that any sum of money or the value of property would not be chargeable to tax in the hands of the recipient if it is received from such classes of persons and subject to such conditions as may be prescribed. A new clause introduced, clause 11. For the first time we are seeing into this 56.2, clause 11, which provides some exemption, relaxation. If you are receiving any immovable property from such classes of persons subject to such conditions, whatever the immovable property you have received, that is not taxable in your hands. That is not taxable in your hands. In the case, who are that such classes of person, who are that subject to such conditions? Let us see. This is also an important amendment, sir. This is not there for May 2020 actually. This is mentioned in November 2020 amendments only. This is not there in May 2020 amendments, right? Hoping that many of you are listening to this provision for the first time. Sorry again, as I'm into practice, some important calls are there, need to attend. Yeah, come back. So, central government has wide this notification inserted rule number 11 UAC to provide that provisions of section 56(2) clause 10 shall not apply to any immovable property being a land or building or both received by a resident of an unauthorized colony in the National Capital Territory of Delhi. By a resident of an unauthorized colony in the National Capital Territory of Delhi, where the central government by notification in the official gazette regularized the transactions of such immovable property based on the latest power of attorney, agreement to sell, will, possession letter and other documents, including the evidence of payment of consideration for conferring or recognizing the right of ownership or transfer or mortgage in regard to such immovable property in favor of such resident. Now, what is this provision, sir? Unauthorized colonies. So, what are unauthorized colonies? Let me share you a material for the better understanding of unauthorized colony. Right, you can see on the screen list of authorized colonies in Delhi and unauthorized colonies in Delhi, right? And under unauthorized colonies in Delhi. There were so many colonies, so many areas in Delhi were unauthorized. Now the government is in the process of authorizing them, right now. See, you can see here, in a move that is about benefit nearly 40 lakh people, a proposal has been approved by the Union Cabinet recently that shall grant the ownership rights for the people who are said to be living under unauthorized colonies present in Delhi. It's way back in 2007, sir. It's way back in the year 2007. See, there were some areas, some ridge lands. Ridge lands means the lands which are on the top of the mountains, hilly areas, or the lands of which is more near to the forest, and lands which are covered by ASI, Archaeological Survey of India, Survey of India. Sharag Reddy, I'm coming to that point. I'm explaining from the beginning first. Thereby, you can understand what is authorized, what is unauthorized. Okay, now, what is the criteria to treat this colony as authorized, this colony as unauthorized? I'll come to that. That is why I'm starting from the beginning. I'm starting from the roots. Thereby, you can understand in a better way. Okay, now. So all these lands which were occupied by the people for their residential purposes, ridge lands, the lands in the forest area or near to the forest area, the lands covered by ASI, Archaeological Survey of India. These lands were occupied by the people very long back, way long back, from their grandparents, great grandparents onwards, the people are used to stay in that particular lands, but for which there is no proper documentation and no authorization from the government. No authorization from the government, right now. They started occupied that lands, and they started using that lands for their residential purposes. Residential purposes. Now actually after so many years, so many struggles, in the year 2007 for the first time there were about 1639 applications received from the applicants, right, for the very first land authorization efforts made by their side. The unauthorized colonies that are said to be located in the ridgelands, as I told you just now, forests and close to ASI. ASI stands for Archaeological Survey of India. Archaeological Survey of India. Are also at present taken under the active consideration by DDA. DDA stands for Delhi Development Authority. Delhi Development Authority. DDA stands for Delhi Development Authority for the colony authorization process. Colony authorization process. You can see here the given instructions and everything. The Delhi Development Authority shall create a unique web portal whereby the people who are living in that unauthorized colony, they have to apply for the ownership. See, they just occupied the land and started constructing some small huts or small buildings, right, for their residential purposes. They were not the legal owners of that land. They were not the legal owners of that land. They have just occupied that particular land. They were just occupied that particular land and started using for their residential purposes. Started using for their residential purposes, right? Now, at present, the Delhi Development Authority is under process of regularizing that lands. And now they are giving the legal ownership to that people who are living in that area. They have to apply for the ownership, right? And being a resident of an authorized colony area, you need to first submit a self-assessment certificate and make sure to calculate the overall registration levy too. So whenever the property is getting registered on your name, you are subject to the payment of the registration fees. This is an entire process. So what happens if my area got authorized, right? If my area is covered under authorized colony, what are the benefits I'm going to get? You can see here, all these are the benefits you are going to get. These are all the benefits you are going to get. People living under regularized colonies can swiftly obtain authorization from concerned government authorities to build any kind of civil infrastructures. If you want to construct some additional floors on your building, you can just go to the nearest municipal authority and you can take the permission and you can construct the additional floors. Sewerage and drainage collecting facilities shall be added to your colonies, right? And living in authorized piece of land can even develop the real estate value year by year. See, if it is an authorized value, authorized building, 10:30, 10:45. Authorized land or authorized building, the value will get increases year by year, right? If it is an unauthorized, see, general language lo cheppalante, see, when I am trying to purchase a building, first what I will ask for BRS. If that building have BRS, then I can get the loan, I can get all the permissions from the government. Building regularization schemes. Building regularization schemes. When I am going to purchase land, I'll ask for LRS, land regularization scheme. Land regularization scheme. See, if you have the LRS and BRS, that was covered under the government purview. That means the government is given authorization for that land. Government has given the authorization to that building. It's a legal ownership. It's a legal deed. No kabjas, no binamis, nothing, right? And we can comfortably purchase that kind of building, that kind of land. When you purchase a building or land without having LRS and BRS, in future definitely you will get a problem. Definitely you will get a problem. Are you following me? Right? And even if you purchase a building without having BRS, even the banker will not give you loan. Right? He said that no, sir, this is an illegal property. Unauthorized colonies, unauthorized by the government, So they don't get any government benefits. Since it was unauthorized, no loans will be given. No person will come forward to purchase that land. Are you following everyone? If it is authorized, yes, you will get all the benefits from the government. Sewerage, drainage, regular, you will be covered under BRS and LRS. You will be provided all the public amenities like community hall, green space, parks, and everything. Are you following now? Sir, idantha baane undi kani come to amendment. Now, what is amendment here? So, first of all, try to understand what do you mean by unauthorized colonies. So, hope everyone got the clarity regarding unauthorized colonies. Unauthorized colonies. Am I clear, ma? Unauthorized colonies. This is all the story regarding that unauthorized colonies, regularization bill and everything. Yeah, no come back. No come back to the amendment provision. So now what the people who are there in unauthorized colony, what they have to do now? They have to apply for registration. As I just now displayed to you, right? The Delhi Development Authority is going to develop a web portal for this. From that web portal, we need to apply. See, if I'm from a person from unauthorized colony, I need to make an application. I need to make an application for registration in order to claim the ownership rights. Right? I need to pay the registration fees. I need to pay the registration fees. Right? Now, when I applied for that ownership rights and by paying that registration fees, I'll get the ownership rights from whom? I'm getting the ownership rights from the government. I'm not paying any amount towards the ownership. I'm just paying only that registration fees. Right, ma? And it's a kind of a gift from government. It's a kind of gift from government. We generally observing in the, in reality also, there were so many people who occupied the lands of government. ఇప్పుడు ఈ టెంపుల్ ట్రస్ట్ వాళ్ళవి రిలీజియస్ ట్రస్ట్ వాళ్ళవి కొన్ని ఆక్యుపైడ్ ల్యాండ్స్ ఉంటాయమ్మా ఆక్యుపైడ్ ల్యాండ్స్ the people will just go there and occupy that land and started initially started putting some small huts, and after 10 years or 15 years they will construct a building. After 20 years, 30 years, they will claim this land is belonging to them. And after having such a kind of residential accommodation for 15 to 20 years, the government cannot vacate that land and cannot vacate the people to vacate that particular land. There will be huge troubles coming right now. Right, the opposition party will comes into scene right now, and then this government is doing nothing to the people, and even the people who are there in that particular land occupied for 25 to 30 years, now the government is coming and vacating them. All these nonsense issues will be created by the opposition parties. Yes or no? Occupied lands. So what ultimately the government will do is regularization. Authorization will be given. So I am the owner of a particular land which is occupied by me. Till today it is an unauthorized colony. Now I am applying for ownership rights by paying registration fees. Right, ma? At present, what is the registration fees? Stamp duty charges 6%. 6%. On the stamp duty value, it's enough to pay 6% as stamp duty. If you pay that 6% stamp duty, you will get the ownership rights. So that means I am applying for the ownership rights by paying the registration charges. That means I am getting the ownership rights from the government, and then nothing but I am getting a gift from government in the form of immovable property. Now, am I liable to pay tax on this gift? Answer is no. That was amendment. That was amendment. Are you following, everyone? Don't close to you. Very good, ma. Once again, no issues, ma. No issues. It's okay, no problem, Gopi. No problem, no problem. It's a simple logic, ma. In Delhi, there were so many areas which are now uh, authorizing by the Delhi Development Authority, DDA. Unauthorized colonies now converting into authorized colonies. The difference between unauthorized and authorized is that if you are the owner of a land or a building in unauthorized colony, you won't get any benefits from the government like drainage, sewerage, community halls, public parks, public libraries, nothing, right? Public lighting, everything will not get unauthorized colonies. Now the Delhi Development Authority authorizing them. What the people who are living in unauthorized colonies have to do is they need to make an application. They won't be having any ownership documents with themselves. If they want to sell, they can sell only through power of attorney or agreement to sell. There will be no registration documents, right, ma'am? There will be no registration documents. Say you purchased a land or a building from unauthorized colony, sir, right? The transaction will be happen only through the power of attorney or through agreement to sell or a will. That's it. No registration deed, no sale deed, nothing will be there. Only through power of attorney or agreement to sell, nothing. That's it, ma. You will pay the consideration. We people entered into the power of attorney or agreement to sell, the transaction closed. But now, when it is converting into authorized colonies, you are going to get a registered ownership, legal ownership, right, ma'am? What you need to provide the documentary evidence as if you have any power of attorney or agreement to sell or will or possession letter and the documents evidencing the payment of consideration, then you need to make an application to the government by producing all these documents and the document evidencing the payment of consideration and paying the stamp duty fees, right? If you made an application with all these documents and payment of stamp duty fees, you will get a registered ownership from the government, a legal ownership from the government. So when you got a legal ownership, you will get all the benefits from government. Your building will be having BRS, your land will be having LRS. You can get permissions from the various local authorities for the extension of the building, or you can get very easily the loans and advances, right? That is advantages. Now, whatever the registered ownership you are getting from the government, right? Conversion of unauthorized colonies to authorized colonies. Now, in this transaction, you are getting ownership only just by paying that particular 6% stamp duty charges. And it's a kind of a gift from government to you. And a land మీకు ఇచ్చేస్తుంది government ఇంకా ఆ building మీకు ఇచ్చేస్తుంది gift, right? ఇప్పుడు whether that amount will be taxable in your hands and the answer is absolutely no. It's not taxable. Clear? Next. So unauthorized colony, you can see the meaning. A colony or development comprising of a contiguous area where no permission has been obtained for approval of the layout plan or building plans and has been identified for regularization of such colony in pursuant to the notification number, right, of the Delhi Development Authority. Good. Now let's moving on. Permissible other electronic modes prescribed for the purposes of certain sections. Right. See earlier, whenever there is a need of making the payment through account pay check, account pay draft, and ECS, electronic clearing systems. 48.3 actually for the first time we have studied. Whenever there is a payment exceeding 10,000 rupees, of course 35,000 in the case of transport operators, then you have to make the payment either by way of account pay check, account pay draft, or through ECS, electronic clearing systems. Electronic clearing systems. Now a new wordings added to this provision. They said any other electronic mode of transfers. Any other electronic mode of transfers. Sir, what do you mean by any other electronic mode of transfers? You will be given with a list and yeah. These are all the any other electronic mode of transfers. CBDT has given the clarity regarding this electronic modes of transfers. You can make the payment through debit card, credit card, net banking, IMPS, NEFT, RTGS, UPI, BHIM. These are said to be the electronic mode of transfers. So these wordings have the impact on various sections. Right now, what are the various sections? List is given there, ma. First one, section 35 AD, specified businesses, where we have a list of 14 specified businesses, with respect to which, whenever you are incurring a capital expenditure, that capital expenditure, if exceeding 10,000 rupees, then you have to meet that expenditure either by way of account pay check, account pay draft, ECS, and any other electronic mode of transfers. Then only 100% of deduction will be allowed to you under section 35 AD. Next, 48.3 మనకి తెలిసిందే cash payments in excess of 10,000 rupees. 43.1 actual cost. While determining the actual cost for the calculation of depreciation, if the cost of the machinery, the cost of asset exceeding 10,000 rupees, again you need to acquire that asset by way of account pay check, account pay draft, ECS, electronic clearance, any other electronic mode of transfers. Next, 44AD1 presentive income. 44AD presentive income. Under section 44AD, we have to declare a minimum 8% of total turnover as our income. But if all the receipts were online, then it is enough to declare 6% as your income. Enough to declare 6% as your income. Are you following, ma? Now, online అన్నప్పుడు ఇక్కడ ఏమేం కవర్ అవుతున్నాయి సార్? Account pay check, account pay draft, ECS, any other electronic mode of transfers. But even if you receive that receipts through any other electronic mode of transfers, then you can claim 6% each. Enough to declare only 6% of the total turnover as your presentive income. 43CA. 43CA, 50C is actually both are one and the same. The only difference is if the land or building are both transferred is a capital asset to you, 50C. If it is a stock in trade, 43CA. That's the only difference amount. See, if I am transferred a building for a consideration which is lower than stamp duty value, for me 50C is applicable. For me 50C is applicable. If the same building transferred by a real estate person, for him 43CA is applicable. For him 43CA is applicable. Are you following me? For him 43CA is applicable. Because if the land or building are both, you are holding as a capital asset and sold for a price which is lower than stamp duty value, 50C. If you held them as a stock in trade, then 43CA. Sir, you said here stamp duty value. Yes. Stamp duty value, which stamp duty value should I take? Stamp duty value as in the date of agreement or stamp duty value as in the date of registration? Obviously, we will take the stamp duty value as in the date of agreement. Obviously, we will take the stamp duty value as in the date of agreement, but star mark, subject to conditions. What are the conditions? Condition number 1, either part of the consideration or full consideration should be received by the assessee on or before date of the agreement. Condition number 2, such consideration should be received by account pay check, account pay draft, ECS. And now we also have the fourth mode of payment, that is any other electronic mode of transfers. And even if you receive the part of consideration through any other electronic mode of transfers, that is said to be, the condition is said to be satisfied, then you have to take the stamp duty value as in the date of agreement. Are you following me? Right? Apply the same logic holds good even 43CA as well. 43CA లో కూడా business income calculation చేసేటప్పుడు we should take the stamp duty value as in the date of agreement, again subject to the satisfaction of the two conditions. Next, 56 to clause 10. Here also, whenever you are calculating the gift value, when it comes to land or building or both, stamp duty value we should take into account. So which stamp duty value should I take? Stamp duty value as in the date of agreement, subject to the satisfaction of two conditions. Next, 80JJAA, additional employee cost. Additional employee cost. 30% of additional employee cost can be allowed as deduction. We can claim it as deduction. But here, whenever you are making the payment to that additional employees, you have to make the payment through account paid check, account paid draft, ECS, and of course now the fourth one also added, any other electronic mode of transfers. And even if you pay the emoluments to your employee among these modes of payments, still you are entitled to deduction under section 80 JJAA. Clear everyone? Next. Okay, then we'll stop here, sir. We will stop here. It's now 10:45. We'll go for a break. We'll take a break. After the break, we'll continue from chapter 9 amendments, advanced tax, TDS and TCS. Of course, the entire discussion about only two sections, 194N, 194M, which are very important for examination point of view. Definitely, you'll get a question on it. 194N, 194M law, you'll get definite questions. Okay, now time for the break. Those who are having the doubts, you can ask Ma. You can stay in the group and you can ask. Thank you, Shirak. And those who are not having any doubts, you can leave the meeting and enjoy the break. We will resume at 11:30. At 11:30, we will start the class. Those who are having the doubts, stay in the meeting and ask me. After the break, just remember, this note point actually we have not yet covered. We will cover. This is a very important note point. We will cover after the break. You just remember me.